Good morning, everyone. Welcome to another morning forecast. These are the three pairs that I've got on watch for today: Aussie Kiwi, Dollar Yen, and EURCAD. You can see yesterday with the DXY that we got some really nice momentum come in, especially looking at this daily candle. We had some nice momentum coming after this kind of channel completed itself. And this reminded me of something that I said a week and a half ago, with how price can come into these kind of lows or these key areas that a lot of people will be looking at. And you'll remember me mentioning this little correction here that started this move that price has pretty much tapped into, and how price can hang around in this area for a couple of weeks before it actually moves off. And there could still be opportunities within these areas that we can take advantage of. And it's not a case of price just reaching a low and just moving off, or coming up to a high and then just selling. It doesn't always work like that. And it's in these areas where people lose patience and almost expect price to just move straight away. Like I mentioned with these candles, they were early signs that we was potentially starting to get the move to the upside, but it can change just as quick, and we can hang around here for another week before we start to get some big shifts for the buys. So it just reminded me of that, where people can get caught in seeing these green candles and thinking, right, we've hit the low, we're starting to get some movement to the upside. This is the leg. This is where the momentum's coming in. It's going to start tapping into these areas, and then a couple of days later, you start to see this. So these are the key areas where you've got to maintain that patience, because you can get sucked into so many trades that are just not ready. Because as you can see, even on the lower time frames, we're still in all of this, and that doesn't mean there's no opportunities, but you can't get caught up in expecting key areas to be hit and then price just to move off straight away. So just a bit of a reminder, because it reminded me this morning, seeing this, when I saw this kind of channel leading into tapping into all of this volume on the left. We've obviously reacted to that and sold off. So my first thought now is we're going to most likely tap into at least this low to complete this channel. So we could still get some continuation here and another follow through before price comes back in, and we start to see that, which could be the rest of this week. So there's no need to rush any of these things, and that's why doing something like forecasting makes it so clear and easier for us, because we're giving ourselves the heads up and telling ourselves that this is what may happen, and it just stops a lot of negative emotions coming in when you think price is going and then you see this sort of thing the next day. So just a little reminder on that. But I am now looking at least this low to be hit, just for this channel to complete itself. And obviously this is the next area of value that price may want to tap into before we move back to the upside, and it could just be playing a larger range where we actually then just get another sell-off. So we'll have to wait and see what the DXY does, as always. But it could be that we just get a little sideways movement and then price continues to move off a little bit. So that's why a majority of the dollar pairs are not really on watch for me yet, because of this dropout. They do need development to actually start to shape up some structures or reach their next value area before we start to see if there's any potential reaction off of those. So they are on softer watch because they need some time. They need a day to start to build something. And as I've mentioned before, Dollar Yen has a mind of its own. It doesn't always move the same as the DXY. So that's why this is on watch, because that can shape up, completely differently. So main watch is Aussie Kiwi. You can see on the daily how heavy this is looking now to the downside. We've had multiple bearish rejections at a key value area, and we're looking at this 1, 2, 3 leg to complete down to the low. So price has got a reason to come down, and we've now had this 4-hour follow through. So we've got this strong 4-hour candle, and we're now starting to consolidate on the 4-hour. So price is building its next volume for this dropout, and we can see essentially we're playing the smaller version of the 1, 2, 3 for the sell. So all I want to see here is, if I go to the 15, you can see that we've got this kind of area here, and we've got these near misses and gaps. So all I want to see is price pull up to this sort of area. This is kind of acting as a bit of a middle section, and then price to move up to this area to fill these gaps, and then we can look for the risk entry for the sells. The 1 hour, you can start to see the structure. So this potentially could be, depending on how long it takes to shape up, this could, or most likely, be a 1 hour risk entry in this area. And this is not really far away. This is like 20 pips. So price can literally get there in 2 candles. And then before you know it, you've got your risk entries on the cards by sort of New York session. So a simple 1 hour risk entry up here, you got really good stop protection, 10 pips, puts you way above all this area. You can manage, you got 1.5 to the lower the structure, so easily manageable, and then targeting at least a breakout to the middle section of this structure, somewhere around here. You're looking at 6 to 1, and that's all that's moved is 60 pips. The higher time frame, if we're playing the larger 1, 2, 3, we've got all of this range to play with, even down to the bottom of the channel. You're looking at, nearly basically an 8.5 to 1. And this could be a really nice run with the higher time frame in mind, that if it takes over, we're playing the larger 1, 2, 3. We've got all of this range to play with. So now it's just about getting positioned on the lower time frames for the sell. So I'm just waiting for price to pull back up, and then we look for that risk entry, and we're playing this 1, 2, 3 to the downside, which would be a really nice position. Dollar yen. So this does move slightly different to the DXY. So although the DXY may, hit a bottom and start to turn around, dollar yen can just basically have a mind of its own. So we can see on the daily that we've completed this V shape. We've sold back off, and we had this bearish wick that price has now filled, and it's kind of crept its way back up, and we've now got this huge washout above, and now starting to see the early signs of a potential kind of evening star formation with this bearish daily candle. And we can see on the 4 hour that we've had a strong 4 hour leg back in. We're now trading underneath all of these highs on the left. So we've got a very strong 4 hour. So all price needs to do now is just give us some kind of continuation like this on the 1 hour, and then we can look for the risk entry and play this impulsive leg, the 1, 2, 3, and basically just sell it back down into, within this range. The 4 hour, we can see, even if we treated this, we've got a bit of a 1, 2, 3 going on here. Even if we treated it down to this low, so we're playing basically this range. If we get a structure shape up here, continuation, that is so much range for a good risk to reward, even just down to here. Forgetting the lows, just from point A to point B, that is a big range that we can get some really nice risk to reward from. And we've had a clear reaction on the 4 hour. So all I'm waiting for now is just literally sitting tight, letting the market breathe after this big push, let the market consolidate, let it give us an hourly continuation like this, and then we can look for the risk entry and play the sell. At that point, if we get a deliberate structure like this, then all of these, like mini little inflection points will not hold a lot of weight if we get a structure like that, especially after a clear follow through, because price will most likely, after this commits, it will just smash through all of this and at least start to head down to these more key areas. So this needs a little bit of time, but it's such clear, obvious price action that I don't want to see. I want to see how this develops through today, and what sort of structure we start to get. But could be a really nice play for the sells. And EURCAD. So I am still looking at the buys on this, because we do have an obvious gap to this value area on the left. So price has got a reason to move up, and we're starting to get a bit of a daily follow through. So even if it's the short term buy to fill this gap, and then we see the sells come in, or it could be that price just smashes through this and heads to a value area much higher up, and then we're positioned in a really nice trade for the buys. But either way, we've got a bit of room to the upside, that if we get a deliberate structure, we can take advantage of this next move. The 4 hour, we've got this big 4 hour candle that impulsively cleared all of this area, and now we've got a bit of a base that's forming. So the 1 hour, you can see it clearly. We've got this potential first touch. So I'm just waiting for price to develop its structure like this. And if we get something like that shape up on the 1 hour, that is an obvious 1 hour risk entry with, you could say, 20 pips stop. And then to the higher the structure, you've got 1.9, so you can manage that easily. And then just to the first inflection point, you've got 4 to 1. And that could easily break out. If we look on the daily, we've got another little high just above, and then the next area is way up here. Well, there's nothing to say that price could blast through this, and then we start to get another continuation above the value area, and then it's enough to build volume to start to push higher, and you're positioned in a really nice long position that makes sense, because you've had this strong push out, you've had the hourly continuation, and you've had the follow through. So I'm just waiting for this to develop its structure, but I like that we've already got a clear first touch. So if we get something this obvious, then that'll be a deliberate message to at least follow through to the upside. And if we measure the impulsive leg that it's come from, that clears those highs anyway. So that could be tapping into that minor little high above this value area before we start to get a strong break back in. And at that point, this buy could be running 6-7%. So even if you manually closed at that point and you banked a strong, healthy 6%, that's a really decent trade, just taking advantage of this last push into the highs. So they are the three main pairs that I'm looking at going into today. Just need Aussie Kiwi to pull up to this area value where we can look for the dropout. And then dollar yen needs to build its structure. And EURCAD, we've got a clear base that we can start to work with. So we just need this to develop a little bit. And that could be a really nice long up into the next highs. So there may be some further developments on some of the other pairs where my watch list shifts around a little bit this afternoon, depending on what type of momentum comes in. But they are the main pairs that I'm looking at going into today. So I hope you enjoyed. I've still been getting some really good feedback around these forecasts, helping quite a lot of people, which I'm happy about. It helps me as well, being able to do this every morning and kind of just keep going over the knowledge that I know. So I'm glad that it's helping a lot of you. And thank you as always for the support every single week. Trade safe, and I will see you as usual tomorrow morning.